Hello friends, family and followers, my name is Mike and today we're going to be investigating GameStop Corporation. GameStop is a retailer selling new and used console games and consoles. Recently they've introduced a new collectibles line and games and more to try and make up for the losses in revenue that they're experiencing in games because we're coming to the end of the gaming console cycle. GameStop have 5,700 stores across 14 countries, including New Zealand. Here, they're branded EB Games. Now, turning to their current position, you can see here that their balance sheet shows net assets of $617 million. And the shares are currently trading at a market cap of $304 million. So for every dollar you invest today, the company has $2 of stock, cash or other assets. So you can buy now, half price, buy one get one free, limited time only. Sales are not faring well though, and have dropped in the last 12 months by $700 million per year, or about 9%. In the 3 years since October 2016, the trailing 12-month sales have dropped by $1.8 billion per year to only $7.3 billion. So sales are not looking good. And earnings also look pretty bad on the face of it. In October 2016, sales and earnings started to drop, and within 12 months, GameStop went from consistently making $300 million per year to making no profit at all. Even worse, this created a feedback loop, eroding over $1 billion of goodwill between the middle of 2018 and mid-2019. This horrific financial failure led to the new CEO, George Sherman, joining GameStop, who took over in April 2019 and is trying to steady the ship. With no goodwill left to write off, he's managed to reduce the trailing 12-month losses to $500 million per year by writing off poor-performing assets and closing poor-performing stores. Sadly, there are more write-downs coming in the next half year as they close more poor-performing stores or stores that are just too close to each other. So what is the secret sauce that keeps me interested in this stock? Where is the potential to make $1 million on GameStop? Well, here are the three key aspects. Fundamentally, continuing operations of 5,000 plus stores are still breaking even. This means once the write-offs are complete and they've right-sized their business, the company isn't losing money in the trailing 12 months and still has some hope. The new CEO, George Sherman, has experience in retail and appears okay with changing trends and bringing in a fresh vision. He is trying new things, experimenting with new product lines, and trying new, unique value propositions, like a store that feels more like a club, to slow the revenue purge from bricks and mortar stores to online. Most importantly, there hasn't been a new Xbox or PlayStation since 2013, and back then sales turned around from a low of $8.5 billion a year to $9.5 billion a year over a 12-month period. If this can be achieved again in late 2020 with the new Xbox and PlayStation consoles coming out, an extra $1 billion in turnover at 28% gross margin will add $280 million profit per year to the bottom line, turning the company from break-even back to a substantial profit. So, what's my investment hypothesis? I believe GameStop can achieve a $1 billion increase in revenue and an increase of earnings of $250 million per year sometime in 2022. This would give GameStop a market cap of $1.25 billion with a PE ratio of only 5, or $3.75 billion with a PE ratio of 15, the 2019 average PE ratio for specialty retailers like gaming. This would convert to a stock price of between $19 and $57. Looking at the share price supports and resistance, in the 4 months from August 2019 until today, 17 January, there is a weak support line forming below, suggesting a price in mid-2022 circa $12.30. I think that's the lowest price the stock will reach by 2022. The stock price took a hit last week on bad earnings guidance. It remains to be seen if the support will hold, and it will be interesting to see if by August this year the stock price can break above the 4-year resistance line shown here. Breaching this resistance line could potentially be driven by the upcoming new console releases. This could be where the stock price might trade higher on the buy the rumour, sell the news philosophy that we quite often see in the stock market. Today, the stock price is $4.62. This provides a profit of $7.68 if we hit the bare minimum of $12.30 per share in 2022. Or we'll make $14.32 profit at the target share price of 19. And remember, that's only a PE ratio of 5. That is stupidly low. And we may make up to $52.38 per share profit if we can reach the PE ratio of 15 and a sale price of $57 per share by 2022. So to make $1 million profit, you need to buy between 19,091 shares, assuming we make it to $57, or 130,208 shares if we only make it to $12.30. This requires a purchase of shares at the current price of $4.62 of between $88,200 and $801,500, depending on how high the market makes it to make $1 million. Or with a 20% deposit, if you trade on margin like I do, that will require cash money of $17,640 to $120,300, again depending on whether you need to buy 19,000 or 130,000 shares, depending on where you believe the end price target will be. So, what will I do and why? I have already purchased 3,000 shares on margin of GameStop. I will continue buying more stock when the price is near the bottom, sort of in the $3.30 to $4.62 range. I'll also purchase more shares if the price breaches its 4-year resistance, and I expect this will be breached sometime between $6 and $9. It's unlikely I'll buy up to 20,000 shares, as I will only be putting about 5% of my stock portfolio into GameStop because it is a high-risk strategy. But assuming all of my other investments go amazingly, I will purchase up to 20,000 shares. Again, not breaching that 5%. And I will look to exit at some stage in 2022 with a target price of between 19 and 57. And my gut feeling is probably more about 40. Unless the CEO can pull off some magic that shows further exceptional growth potential and a way to keep the sales coming into the physical bricks and mortar stores that GameStop own instead of using the likes of Steam or Xbox Live or trending online. We have earnings coming up in April that already have guidance publicly issued, with unknown quarterly earnings due in June and September of this year, and they may have a strong and potentially negative impact on the share price before hopefully a blockbuster 2020 Christmas. This company has a good balance sheet and still has promise of future profit. I believe that fear has pushed the stock price way lower than fair market value for this company. It shouldn't be trading at 50% of the cost of its assets. But I do consider this an extremely high-risk strategy, and I'd love to hear your thoughts in the comments below. If you think I'm right and you're going to buy a few shares, please definitely click the like button and the share or the subscribe below. The more you do that, the more YouTube will recommend this to other people. And the more people that see this and believe in this and buy the shares, the more likely the chance is that they'll go up and we'll all profit. Thanks for watching, and I'd love to hear what you thought I missed or what you think's right in the comments below. Have a lovely day. Ka kite ana.